Hey, what's up, everyone? Welcome to Tuck Notes, Beginner Stock Talk. Uh, I'll make this video relatively short, but basically, um, welcome to Tuck Notes. If you're new, welcome. If you're returning, welcome back. And the overall, we're going to talk about Tesla and the overall stock market and what to expect for the next coming days. Overall stock market was basically flatline. The retail stocks kind of got crushed. Tesla was up a smidge. The only stock that actually went up, and that was due to the stock rally, is Amazon. They're having their stock split on Friday, June 3rd, which is coming up in a matter of days. So, good luck to all of you Amazonians and your Rivians, and I bless you. I hope you have good luck, seriously. But moving on to Tesla now. Tesla closed at $758, and it had a great sunrise, like Elon said on Twitter, 734, 720. You'd pick it up, and then 760 or 70, sell it, make maybe $50. It's pretty good for a bear market. The economic data we have coming out tomorrow is going to be basically all the new people that have just gotten jobs and how many of them are there. And the expected number is 11.4 million. There's another sector called the motor vehicle sales. They're going to come out with a number tomorrow. And so is this other, you can Google this, I don't know what it means or stands for, but it's ISN manufacturing data. And they will be releasing their information. And so that will have, if there's any surprise on that, it will have some form of impact on the whole stock market, not just one at all. And so I'm going to have this guy explain this in detail a lot better. I mean, so far he's been the best analyst that's explained some of parts of Tesla.
So remember 2020, you had COVID. In 2021, you had it reopen. Inflation's averaged about 3.3% if you look at the core PCE. So we see inflation easing throughout the year. You're already seeing it come down. And as the Fed will take a 50 basis point increase in June, and then again in July, and then we think it's going to pause. So that lets us be more confident that growth stocks will continue to rebound, as you saw last week. Not happening today, but we think that over time you're going to see growth stocks rebound. So we're just sticking to our bets, which are, we have mega trends that back each of our portfolio bets, and we're staying with them.
Gary, what has this period been like for you? You're just looking at the future fund. Your top two holdings are Tesla and Alphabet. What are you telling investors when essentially stocks like this are getting hit so hard?
Yeah, you got to be patient. And look, we've been through this before. If you look at Russell value, it's down about 8% since the beginning of the year. Russell growth is down about 25%. So any growth stock that you bought didn't work so far this year. And that's because the Fed has raised rates the quickest pace since the 80s. Again, if you think that that's going to ease, if we believe that rates they'll go up again in June and July, but as long as the Fed pauses, because as you get close to the end of the second quarter, my guess is you'll see people bringing down second quarter GDP numbers. You already had a first quarter GDP number that was negative. We're not predicting the second quarter will be negative, but if you get a number that's closer to zero, my bet is the Fed will pause, and you have QT starting today, which is $47.5 billion a month. We think that will probably get pushed back a little bit. So we're staying the course. As you mentioned, Tesla's our biggest position. It had a tremendous 2020 and a good 2021. It's been down this year because it's a long duration stock. And it's also been down because Elon decided he wanted to go after Twitter, which proved to be a distraction. But as the Twitter overhang lifts, which once Elon gets control of Twitter, which we think he will, but at a reduced price, then the fundamentals of Tesla can shine through. And you got great fundamentals. If you look at earnings revisions this year, they're up about 35% since the beginning of the year. So analysts keep taking their estimates up for Tesla. Second quarter is going to be weak because of China COVID, but most investors look past 1 quarter. 1 quarter, one-time event. People usually look past it. And as you get to the back half of the year, people are going to look forward to the Cybertruck coming out. They're going to look to Europe they have its own plant, and they'll be ramping up production there. They'll have a sub $25,000 car at some point. And full self-driving, while we don't look at it as being an incremental business, it will help sell more Teslas. So we're still very bullish about Tesla. It's our largest position in our fund.
Just a brief follow-up on that. What price do you believe that Elon Musk goes after Twitter for, if Twitter is even willing to say, all right, we'll hear you out on whatever this new price is that you want to put forward?
Right. And then look, this is a three-part drama, if you will. He basically bid 54.20 without doing any due diligence. Well, he waived his due diligence. And then when the market started to fall and growth stocks started to fall, he came up with this idea that, well, the bots and the fake accounts are at least 5%. And so he's been rattling their cage for, I'd say, a couple of weeks now, I think trying to get the price down. Now, we don't believe he'll actually walk away, but he'll threaten to walk away. And if I'm the Twitter board, I don't want to put my business plan on hold for the next 18 to 24 months. Remember, Elon wants to change the revenue plan from being 90% advertising to a much greater percent Twitter fees. So basically charging for users to get a check mark next to their name and get rid of the bots. So he wants to charge $3 a month and see if he gets more users that way. But if I'm the Twitter board, I don't want to put the business plan, if I've already agreed to sell it to Elon, while they fight him in the courts. So I think at the end of the day, Elon's going to threaten to walk away, or he's going to get a reduced price. Twitter will have to sue him to try to enforce the deal. But at the end of the day, with most of these things, you see these guys settle. The last one we saw was LVMH and Tiffany. When you had COVID, LVMH walked away and they negotiated a lower price. I think the price will wind up being about $45 a share, and then they'll call it a day. And then that overhang will lift Tesla. One of the things people worry about every time Tesla falls, as it is this morning, is maybe Elon's selling more shares because he needs more equity financing in order to close the deal. And what I tell people is he's got lots of folks who want to buy Twitter with him. But if you get a $45 price instead of a $54 price, it makes it a lot more compelling to an outside investor.
And that's true. Definitely. And what would you think? $54 he offered, and now he's going to say, I want it for $45, $9 off. It's a big deal. Anyways, so tomorrow morning, or tomorrow, we could see Tesla going from $750 to working its way up to $800, maybe slightly passing up 800. It looks kind of slightly bullish. However, the worst case scenario, we could see a pullback continuation down to the worst case scenario that I've been told is $700. I'm so sorry, I can't say that. Or $699. Big difference, really. But we've gone from $1,152 down to $620, now up to $758, just to give you a little idea of the journey. I hope you enjoyed this video. If you do, push the like button, and if you find these videos helpful, please push the subscribe button, and I'll check you on the next video. Have a good night. Late.